Welcome back, Market Snipers. This is Jesse, and today we have two questions we need answered. One, is the S&P 500 crashing? And two, is that going to impact Bitcoin? That's what we're going to find out today. We're going to take a deeper dive. We're going to zoom out on the charts, and here we're looking at the S&P 500 3-month chart. And if you stick around to the end, we're going to show you some potential, some possible lower targets on SP 500 that I think many people would be surprised to see. And we're going to show you many stocks that have already retraced that level or is getting close to some of those levels. So stay on board and let's jump into this 3-month chart right off the bat. If you kind of zoom out here on this 3-month chart, you can go back here to 2000 where the dot-com bubble, you can see there was 8 out of 10 bearish 3-month candles. So you had 2 that were bullish, but 8 out of 10 were bearish, right? If you go back to 2007, 2008, there was 6 3-month bearish candles in a row on the S&P 500. And if you zoom in from here, we haven't had, other than, a couple 3-month red candles in a row, we haven't had a major pullback. We haven't had a major correction in the market since 2008. And if you zoom out and you compare this to our previous video on the Wall Street cheat sheet, and we talked about this on the previous video, so definitely go take a look at it over here at the market crash. I spent 25 minutes on that as well, so you can get more details of that. But what we're looking at here is there hasn't been a major correction since, right? And this is looking like that blow off top where there was 1, 2, 3, 4, 5, 6, 7 3-month green. I'm sorry, 7 3-month green candles in a row, followed by a 37.5% breakdown on the Nasdaq. Is about 30 to 35% on the S&P 500. If we take a quick look at it from wick to wick here, not quite 30%, right? Then we had the rally. So if you go back to that previous video, you'll see that this is called the complacency area. Everything is back to normal. We're back to, we're going to go see all-time highs. You see it with YouTubers. We see it with influencers. We see it on the news. We basically see it everywhere. It doesn't mean that all of this is going to play out exactly. And of course, none of this is financial advice. Always do your own research and always make your own decision. This is basically what I'm seeing on the charts, and this is what I'm showing with all of you. So this is the all-time high. This is looking like a lower high, especially if you were to drop down to the daily chart, the weekly chart, and even the monthly charts. If you drop down to lower time frames, we've been covering it pretty much every single day, Monday through Friday on our live streams. So definitely join us on the live streams, whether it's live or on the replay crew. We cover the markets every single day. So I've got this arrow here pointing that this could be the lower high. This is a low here, right? All-time high, low. Could this be the lower high? Question mark, right? And then I took this, you see this yellow fractal, just for visual purposes, I did pull it from here. So this yellow fractal is from here, and I place it here. And if that were to play out, that would also put in a lower low. So we're waiting to see if this is going to be a lower high. For the 3-month chart, it's already looking like that on the daily chart, possibly on the weekly chart. That's what we're watching, waiting for. And if we did see 6 3-month bearish candles in a row, similar to 2008, then could we see price come back down here and take out this low, which is confirming the bear market? Obviously, we wouldn't be waiting for that. We as swing traders, we're on the daily chart, or maybe some of them are on the 3-day chart or even the weekly chart as an investor. So let's keep going. Let's dive in. I got another chart here with the same fractal. We've got some targets here, right? But before we get into all of that, you're going to see that we have this blue line right here, and I labeled it the 3-month support, right? And it goes back to the dot-com bubble top, and we got the 2007, close to 2008, called the 2007, 2008 top, right? And then that's the horizontal support of the 3-month chart. As you can see, it never really came back and back tested it ever. It just kind of shot up. It did back test it on this one candle, but it never really came back to back test it fully, right? So are we going to see a round trip back all the way to, the $1,540 range? I think many people would be surprised if that were to happen. We will take it level by level. Obviously, there's no guarantees. We don't know for sure, but as as of right now, that's what we're watching. If we tap on some of these indicators here, right? Long term, we have bearish divergence, right? Our sharpshooter RSI indicator is pulling up long-term bearish divergence, right? Long-term bearish divergence, which means we could see prices all the way back down to target 2, where this fractal comes in at, and then target 3. And by the way, none of these targets are built around the fractal or anything else. There's other major reasons why I put out the targets. So we got confluence plus confluence plus confluence over and over again that are lining up with these targets. And we're going to go through several of them, right? So we do have bearish divergence long term. We had long-term bearish divergence back here from the dot-com bubble era and from 2007, 2008. And then we saw RSI come all the way back down to the 30 level, right? On the 3-month chart. So it takes time to play out. Came all the way back down and even took out this low here, right? So that's another thing. So we have long-term bearish divergence. Is this going to be the lower high, right? You can kind of see like a lower peak right here. Is that going to be the lower high? And it continues downward. We had an RSI sell signal on the EMA. That's what we're watching, right? Now we had MACD bearish crossover, right? So if you go back to the 2000.com bubble era, we had a bearish MACD crossover on this 3-month chart. Remember, this is the long-term 3-month chart. It doesn't happen very often. It doesn't flip back and forth nonstop, right? So it is something to pay attention to. It's not something that just flips right back around and goes back up and makes all-time highs, right? We had a MACD bearish crossover, right? And it lasted from call it January 2001 all the way to a bearish crossover January 2005. We're talking about 4 years. It had a bearish MACD crossover. Less time back here on April 2008, and then finally a bullish crossover a couple years later, right? So there hasn't been a negative bearish crossover since January 2011, right? We're talking about 10 years of up only, right? So keep this in mind. There's a lot of traders. There's a lot of new traders. There's a lot of new investors out there. A lot of young folk that have not been through a major downturn before. So they believe it's up only. One thing we will circle back, will it impact Bitcoin? Bitcoin was built out of this era back here. And basically since 2010, since 2009, Bitcoin is only known up only. So will it impact Bitcoin? We're going to talk about it more and we'll continue to talk about it. But we do have a bearish MACD crossover on the 3-month, and we have not had a bearish MACD crossover since 2008. We had that bullish crossover and 10 years of up only, right? So it looks like we're going through a longer term correction here, despite what many experts think, despite that the Fed is going to, you hear all the narratives up there, despite all the Fed's got to come with the bazooka of money printing and stuff like that. Regardless of all of that, doesn't matter, right? This is a long-term chart, and I would be surprised if this bearish divergence doesn't clear out. I'd be surprised if the MACD just flips right back around bullish and then continues to make higher highs. Is it possible? Definitely. It is always possible, but the probabilities are stacking over and over and over again for longer term corrections, right? It had an amazing run. It had an amazing from down here 2009 all the way up. not even a multi 3-month candle correction, right? It was a massive run, followed by on the NASDAQ was 37.5% down, followed by an amazing rally that we were talking about, followed by, is that it, right? That's what we're going to continue to watch. Now, let's keep going. Let's keep moving in. Let's put the indicator back on. One other thing I want to point out is we did have a 3-month reversal candle back up here. We did have a couple back down here, and there was one more 3-month candle that closed or that was down as well. But on this one, this was a reversal candle. So that could signal that this was the top, right? We don't have another one down here, but maybe if I change the inputs, we would have it. So let's go ahead and take that back off. And then I'm going to add on the 200-week moving average, right? So the 200-week moving average, as you can see, going back to 2000, price went well below it, right? And then 2007, 2008, price went well below the 200-week moving average. So far, we're looking at price bounced off the 200-week moving average, but instead of it continuing to go vertical, it looks like it's starting to level out. We have the SMA at $3,930 as of right now. It is a moving average. It's a slower moving average. So will price come back to retest it? Will it come back to this first target box? I think so. This is what I think based off of all the data that we're seeing on the charts. And this is the conclusions that we're coming to. It seems like it's going to happen, right? If we lose the 200-week moving average, this time you start getting daily closes back below, weekly closes back below, then monthly closes below, then 3-month candle closes below. Then you could see it come all the way back down. So then I have this other 900-week simple moving average, right? You can see that even in 2007, 2008 correction, back here, 2008, 2009, it even went below this 900-week moving average. As you can see right here, went below the 900-week moving average, right? And if you did the exponential moving average, even the dot-com bubble era went below the 900-week moving average, right? So this happens to line up with our fourth target, right? So going into the targets, we have potentially back to the 200-week moving average, back to target one. We have the fractal coming down into target two from 2008, right? We have target three. We have target four. We have the 900-week moving average starting to level out. And could price come back down to the target four, right? We have this bookmark of the 3-month support. This is what we're going to find out. I'm going to show you several charts, not too many, but several big name charts, and they're diversified. Some are retail, some are more well, we'll jump into it, but you got some big names like Amazon, Target, Netflix, PayPal, right? So we're going to take a look at them, and we're going to show where price already came back to the 3-month support, or price came back to the March 2020 lows back here. So is it just a matter of time of the NASDAQ, S&P 500, the Dow Jones, the Russell? We're going to take a look at it all. We're going to take a quick look at them. So you can see, here's the Target Corporation, all-time highs up here at $269, came back, tested the 200-week moving average, bounced up, and then started closing back below. It's closing in on the very similar 3-month support, right? And by the way, the 900-week moving average is coming right in there. So Target has been around long enough to where you can see that in 2008, price also retested the 900-week moving average, retested it back in 2017, and it's starting to flatten out. That target could come back to this 3-month support along with the 900-week moving average. Next is Netflix, right? Had this massive run up to $700, and then 3 monthly candles down, boom, all the way down. Had this amazing rally back up. This was looking like a lower high back above the 200-week moving average. Now it's closing back below. It has been around long enough to have a 900-week moving average, right? So could we see, looks like price already came back down to that level once. So are we going to see a retest back there and even lower, right? If I were to draw a similar 3-month line, it looks like 115, probably possibly below the 900-week moving average. Will Netflix test it, right? So I put out this 3-month support. This is PayPal, all-time high, $310, straight back down, full round trip, way below the 200-week moving average, continuing to trend down. This is down from the top wick to current price right now, down 82%. There's several stocks like this already. Meta had a huge, all the way from $385 at the top, a wick down, 77%, had a massive rally, filled this massive 21% gap. While it shot back up, it created this other massive 20% gap. So down here at the bottom, we were talking about this massive 21% gap. It got filled. Now we're talking about this massive 20% gap that is open down here. Do we think a massive 20% gap is eventually going to fill? Yes, we do. We would be surprised if it doesn't. Keep going. We're going fast here. We have a lot to cover. Alibaba, we had it was called at the time at $320. I remember Alibaba was the Amazon of China, right? Down 82%, down below the 200-week moving average. Hasn't been around long enough to have a 900-week moving average, but down 82%. We're looking at 3M company over here, and we're looking at from the very top, $260 all the way down, 67% off, right? You're looking at price coming all the way down the 200-week moving average, retested the 900-week moving average, bounced all the way back up, and has lost both of them, right? If you go back to 2008, 2009, 3M company came back to retest the 2008, 2009, came back to retest the 900-week moving average, and then it's been up only that entire time, came all the way back, put in a lower high here, and has just dropped straight back down. We're looking at from the 3M company here, continuing to trend down 67%. Amazon, right? Massive move up, starting to have a 900-week moving average down here at $51. You've got March 2020 lows that's already hit, right? So from the all-time high at $189, came back to retest it, down 56%. Looks like it had a bounce. Couldn't even close back above the 200-week moving average yet on the 3-month chart. Is it putting in a lower high? Will it come back all the way down? That remains to be seen. We talked about this on the previous video. Go back to check out that video if you want to see my breakdown of the NASDAQ. Here is the BLX on Bitcoin. So had this massive rally during the same time, right? Hasn't been around to have a 900-week moving average. Massive bounce up, right? All the way down, 77%, okay? Bounce back up above the 200-week moving average. Very similar to the stocks that I just showed you. Very similar overall, right? Is this putting in a lower high? Is price going to come back to this 3-month support? Could it even come back lower than that? I think it's possible, right? We all know the halving's coming in April 2024. Will that give it a bounce? Will that give it a rally? We don't know. But if you're comparing it to the stocks, if you're comparing it to the NASDAQ, Bitcoin has never experienced a market crash in the stock market, S&P 500. It's never experienced the NASDAQ.com bubble crash or the 2008 crash. So will it impact Bitcoin negatively? I think so. It looks like a tech stock on this chart. If you zoom out in the 3-month chart, it looks like a tech stock. It could be impacted negatively. Ever since they created paper Bitcoin with futures in 2017, right? It's become more correlated, not less. So I think it's going to continue to be correlated, and we're going to continue to watch it to the downside. If we quick look at NASDAQ futures, you can see, if we look at the Dow Jones, right? This was that chart, the psychology of a market cycle. We talked about it, euphoria. After that big buildup, euphoria over a long time, big move down, complacency. We talked about all that. The Russell 2000 already came back to the March, hasn't come back to the March 2020 lows, came back down here, and then it looks like putting a lower high. It looks more bearish, right? So that's all that we're looking at here on the S&P 500. And from that point, Will the S&P 500 crash? Will it come all the way back down to these lower target areas? And will it impact Bitcoin? If it does, if this is a longer term, bigger market crash, then yes, I do think Bitcoin will have a bigger correction to the downside. And many traders that maybe they only traded crypto for the last 4 or 5, even 6 years, I think they'll be very surprised because they think it's completely separate from everything else in the stock market overall. But it's a risk on asset. And right now it is risk off. And one thing that you can do, if you're not ready to short the market, if you're not ready to trade the market, talk to your financial planner. I'm not your financial planner. See if they have a game plan. Try to protect your wealth. Try to protect what you have. That goes for 401ks, pensions, IRAs, whatever. Talk to your financial planner. See what they recommend. See if they come up with a strategy. I sent a text to my immediate family. They took a screenshot, sent it to their financial planner, and their response was they just met with the partners and they said that they also thought that there could be value coming to the markets, quote unquote. So they agreed with my text message that I sent to my family. But here we are. I'm showing you these charts every single day on the live streams. You're getting a lot more access, a lot more data than my own immediate family. We'll continue to sniper the markets together. Thank you so much for all your support. I appreciate it. And help me get over 100 likes. That is the goal on this video. Thank you so much, and we'll see you on the next one.